Hey, good morning, everybody. It's Mike with smartoptionstrading.com. You can also catch me on Twitter at OptionsMike. Here we are Tuesday morning, guys. It is Tuesday, the 22nd of June, and the markets here are showing some frothiness, but showing some resilience. Typically, we come into the last 8 days, trading days of June, and they're weak. Well, we got a big surprise yesterday. So if we look at the chart of the S&P 500, we got killed last week, right? If you look at Wednesday, Thursday, and especially Friday, the markets were extremely weak. We closed on the dead lows, and it looked like we were finally going to get some selling pressure in this market. We've been seeing rotation now for the last couple of weeks, where they've been leaving these inflation trades and then moving back into more of a growth structure tech area. And you can know the XLF, the financials got killed, the metals have been getting killed, Caterpillar's gotten killed. You can go through and look at the different sectors. I've gone over this in my Sunday charts, but a lot of stuff getting killed. Yesterday, what they do, they gapped us up. What they do by doing that, they trapped all the shorts, and we got a big outside powerful candle on the S&P 500. Not only did we wake up, we went through above Friday's high, through that big gap, and all the way back up to the 8-day where we closed. And here we are sitting here today ahead of Jerome Powell. Now, we do have Jerome Powell speaking today too, and that is the monkey wrench that could throw something into this market. But bottom line, that is a very powerful reversal candle we had on Friday, and I would look for these markets to try to push up, even though we have some froth here. Where we're really seeing the action is in the QQQs. And what we see now here is that the Qs have taken the leadership mantle. And this is rotation. This is a rotation back to tech, back to growth to a certain extent. No longer worried that much about inflation. We talked last week about watching it. The Qs last Thursday made an all-time high at a very powerful candle. After the Fed, they came running to the Qs. They bought stocks. The stocks they're really coming after, though, are large cap growth. And it's a little bit thin right now. And that's my one concern here with what's going on in this market, is that we don't have a lot of leadership in this market right now, right? We have a couple of names that are participating, but overall, we don't have a ton. That said, if this is where they're rotating to, tech looks poised to move. Tech has been the weakest, and it looks like it has the most to run as we're starting to go into earnings season. That comes up in a couple of weeks. So keep an eye on the Qs. So let's do a little bit of chart review today. Last week, I talked to you about Apple to keep an eye on this. This has been trading well. It is waking up. It is trying to break above last week's high as of today. And the next spot there is 135. And I want to point out 135 to you guys, because I remember trying to trade Apple back here about 2 months ago, when it just kept banging its head against that wall. You can see where that blue line is drawn. A lot of resistance in that area. So, the next move is to 135. At that point, see how it handles that. That's going to be a big spot, but Apple's definitely one of the leaders. It's one of the quieter names, slowly starting to wake up, and a name they've been focusing on. So I'm going to keep my attention on the winners. Microsoft hit all-time highs yesterday, another name we've been talking about, another big winner there. Let's go into a little bit of a different name here. Let's look at Tesla. So Tesla's been a very tough name lately. It's been stuck, first of all, in this long-term downtrend. And down here now, it's creating this nice little wedge pattern here underneath that downtrend. One of the things that's negative about Tesla, there's been big out-of-the-money put buying on this the last couple of days. Most of it's very short-term. Okay, not sure what they're playing for. Maybe they're looking for something there. But the stock is resilient. Yesterday, it tried to break out of this wedge pattern. If it can go and it can break above this, let's call it 630 area, and really start to push, we could look for a push up into that 650 area, test that downtrend. If it gets through there, that Tesla can get loose. Just be aware, it's a pattern here, it's a wedge. So if it cannot hold and it goes underneath the bottom of that wedge, it's a breakdown. And this brings us to our last name on the list today. And we want to talk a little bit about NVDA, because I keep getting a lot of questions about this. So NVDA, for me, the game changed. When you look at this chart, you see that downtrend break all the way back there at the end of May and that big push up. That was on news that they were doing a 4-for-1 reverse split. 4-for-1 reverse split, very similar to what Apple did and Tesla did. And they came after. At that point, I said price target was 750. It actually hit 775 last week, but 750 was good enough. It's moved up real nicely now. At this point, it's added no new value. This is the one thing to remember. Apple and both Tesla sold off after the stock split was finalized. This is adding no real new value to NVIDIA. NVIDIA is still a very good company. They're doing a great job. They are a leader in the semis. But right now here, there's no real new value being added. So it's up here because people are piling in for the split, but the split doesn't add any value. So for me, at this point, this area to watch is 720. As long as it holds that 720 area, it remains strong. And if it can push back up over 750, there might be another trade in it. But for me, this is not something I want to be getting involved with until after the split, until after it pulls back again at this point, other than a day trade. So that's my thoughts here, guys. We're going into the end of June, last couple trading days of the quarter. Hope everybody's doing great, and I'll catch you guys in a week.